Hi, thanks so much for tuning in. You're watching DQ Prime, and we're speaking about crude oil prices. If you've been looking at the markets recently, you will have noticed that they've dropped considerably in the recent past, of the last couple of days or so. They have, in fact, fallen to a low from as back as January, the lowest point since January right now. It's below $85 to the barrel for Brent crude. We're trying to understand why this recent move has come in, and we're also trying to analyze whether or not this is going to stay the case in the near term, where the crude oil prices are going to be a little soft, or whether they'll come back in a big way. I've got Peter McGuire, who's the CEO of XM.com, and we've also got David Lennox, who's a resource analyst at Fat Profits, joining in. Gentlemen, thank you so much for taking the time. I guess the most important question that people are going to be asking is why is crude falling after having stayed elevated for much of last year and the beginning of this year? David, I'll come to you first. Do you believe that that's the case, Peter? Is that something that you've looked at as well? And is this something that is durable, or do we see a rebound?
Well, I think a couple of things, Alex. First off, building on what David mentioned, yes, certainly the demand destruction component. We have to also add US dollar index, now sitting at about 114. Put our minds back only a couple of matter of weeks ago, and you're at 105, 106, and maybe we hit 107. Have a look what's happened to the pound in the last two trading sessions, or today and naturally Friday. And we've got a long way to go yet till New York closes for Monday. And we've nearly had parity in one day from 112 to 103, demonstrates the fragility of the market and how the inflation story is really a nightmare on Elm Street. How do you control it? The central bank's views, currencies are being crushed as we speak. Euro at 96.96, no one could put their mind to it. Yen at 145, intervention from banks. So you will see that demand destruction. There's no doubting that. You will see also, I've got to say this, a midterm election only 5 weeks away in the States, or 5.5 weeks. So that's all creating, I think, more ranks, pushing down price, US dollar going to boom to the upside. And then naturally, I think that probably the recessionary fears are biting on Main Street so heavily. So I'm not sure how the inflation story is in Mumbai, but certainly in Sydney, it is absolutely, I would say, dire for the average consumer on Main Street that hasn't had a pay rise. Your $100 of shopping basket a year ago is now costing $130 or more. So it is frightening. Food prices, fuel. Yeah,
it is certainly, Peter. I think the world over, inflation is something of a problem, but in terms of the rate of inflation here in India, it's actually lower than a few developed countries, yours included, I think. I want to take that point that David made, Peter, on China, and I want to ask you how big a factor that's going to be in the coming couple of months. And then I'm going to also ask you, to put the dollar down, I guess, and to tell us, where do you see crude oil prices over the next couple of months?
Well, I think first off, the Chinese situation is, if you buy into the story as far as the property market representing 32% of the overall economy and how fragile it is, and mortgage holders not paying paybacks or their mortgages, then if that is as severe as what the analysts that I read, their storylines, I would say that the next matter of months are going to be a real emperor going into the water and see if they've got any clothes on, because that's where we're looking at the moment, the absolute meltdown of Chinese property market. If that was to materialize, Alex, then I would think that would really put a massive handbrake on not only the Chinese market, but certainly from an energy consumption standpoint, but the debt and the contagion across international banks and domestic banks in China, that would be very, very worrying for the global economy and the fragility that it stands at the moment. So there's the first part. The second part is, how much lower can prices go? Yeah, you might see WTI, I've got, it's sitting at 77.80. it's difficult to speculate, but I won't be surprised if we see 70, if not high 60 for WTI. Probably Brent, maybe it might touch down to 75 on the low side. It's hard to speculate how much further it can go down, but the US dollar index sitting at 114, are we going back to what we saw in September 9/11 and a 120 handle for the dollar index? And if that's the situation, then yes, I think that's going to also add serious impacts as far as energy costs globally.
Peter, is that your view as well? I think from the conversation we've had so far, you're a little bit more bearish on the prices than David is.
Well, I'm bearish in the sense where I won't be surprised, but remembering, what we're going to take on board, Alex, we've got Mother Nature issues that could absolutely cause havoc in the Gulf region with the hurricane there. Just let's just say that plays out. Secondly, we've got the situation with Ukraine and Russia seems to be escalating every day. So we've got some major geopolitical issues and Mother Nature issues on our doorstep that can change the footprint of price very, very quickly. So whilst I say, yes, we've got the potential to hit a high 60s, and I won't be surprised, I don't think it's going to stay down for that much longer. I think it's going to be very wild and whipsaw. That sort of, you see those big 5% blowouts each night. We've got a US dollar moving very strongly to the upside. Let's see what happens if that goes back to 110. That's going to take a little bit of heat back into the commodity markets. Everyone's dollar centric at the moment.
All right. So that's the watchword really in the commodity space. We're all looking at the dollar index to see how far it goes and where it goes from here. But at least for now, crude oil prices seeming a little bit soft, a little under pressure. Thank you so much, gentlemen, for contextualizing all of that for us. And thanks so much for speaking to BQ Prime.
Thank you, Alex.
Thank you.